UNH just tumbled over 50% from its highs. Will it ever recover? Massive DOJ investigations and dividend cuts could push it way lower. I'll reveal the exact price range where we'd start buying and when to lock in gains at DCF fair value. Over the last 30 days, UNH has trended consistently lower, starting near $485 and sliding steadily toward the $360 to $240 range. A sharp post-earnings drop on May 15th brought the stock near $240, but it managed to bounce back to $274 today. The overall trend highlights a steady decline that's been punctuated by occasional rebounds, showing how traders have reacted to the stock's weakness during this period. UNH has collapsed nearly 56% from its all-time peak, hitting $274 today. Technically, the stock needs to reclaim its 5-day moving average before any real bounce can begin. On the weekly time frame, the critical support zone lies between $210 and $292. If UNH breaks below 210, it signals a deeper breakdown, but holding above 292 and cracking back above the 5-day MA would mark the first sign of a true recovery. From a valuation standpoint, our discounted cash flow model pegs fair value between 532.02s and 743.75s. That gap between today's $291.91 and a $532 midpoint represents an upside of almost 95%. But don't go all in at once. Instead, dollar cost average over the next 3 to 6 months. Start layering in small positions if UNH can close and hold above the 5-day MA, ideally between $250 and $280. Then, if it holds support and shows real buying pressure, add more up to a full allocation. Target partial profit taking as the stock approaches the low end of DCF value, $535, and consider selling into strength toward the top of that range, $744. For in-depth charts, model downloads, and our full analysis, head over to mam.com.